The New South Wales budget was handed down yesterday. It's been criticised, though, for not addressing housing affordability.
Housing affordability is a huge issue in New South Wales. Look, in the budget yesterday, we heard that property prices in Sydney have jumped about 20% since the start of the pandemic, and it's getting more and more difficult for a first home buyer to buy their first property. Things are just getting too expensive. So in the budget yesterday, there were a lot of good things. There's record spending on infrastructure over the next 4 years, record spending on health and education. But housing affordability is becoming quite a big problem. In fact, the Treasurer was saying some people are now being priced out of the market. They're not able to buy a home. So the Treasurer Dominic Perrottet, he does have a proposal to make buying a home easier by changing stamp duty, which is quite a large amount of money you need to pay up front, to an annual land tax. And that proposal's really been in the works for more than a year, and we got a little update yesterday from the Treasurer saying they're still taking feedback from various stakeholders and won't really get an answer to that feedback until the 30th of July this year. But this policy is going to be quite a big policy to make it's going to be a big change. So it's probably going to take quite a few years before it can really come into place if it does get approved. So it was a good budget overall, but there were some glaring things missing, including housing affordability.
And Ed, interest rates were expected to remain on hold at record lows until 2024. But this week, in some sectors, there's been a little shift and some new speculation that they could rise earlier than expected.
Well, that's right. It's all really around the US Federal Reserve. They're the equivalent of Australia's Reserve Bank in America. And every so often, their Board of Governors takes a survey. It's an anonymous survey, and they're basically asked, which way do you think interest rates are going to go? And at the recent survey, several of the Board of Governors said they were going to go up next year, and some others said the year after that, which is much earlier than everyone thought. So back in Australia, we've got the Reserve Bank, and they've said constantly that interest rates are going to stay on hold until 2024. But it looks like that's starting to change. And a big reason for that is the unemployment rate. The unemployment numbers for May were amazing. It was really a big surprise to everyone. The unemployment rate's now 5.1%, which is much lower than everyone thought. That's really a sign the economy is back on track much sooner than expected. So it could result in an interest rate rise. In fact, we've got Westpac's Bill Evans. He's their chief economist. He wrote a research note recently predicting interest rates would rise in 2023, 1 year earlier than expected. And it is actually looking pretty likely now. The market is starting to price it in.
And the stock market had one of its worst days of the year on Monday, Ed. It was an absolute shocker. But then it had the best day in 4 months yesterday. That's how it works, doesn't it? It goes down, it goes up again, so there's no real need to panic. So what's behind all the volatility?
It's been so volatile, and it's all linked to this interest rate speculation. So the US Federal Reserve survey thing was on Friday, America time, and their stock market dropped very largely on Friday, and that affected our market Monday morning. So yeah, it was one of the worst days of the year. Market lost almost 2%. But then suddenly it just bounced back yesterday. We're only on Wednesday and we've just gone up and down. It's very hard to predict these markets, but it's pretty clear that whenever there's any interest rate speculation, we're going to have a bit of a red hit to our market.
Yeah, okay. Ed Boyd, good to chat. We'll talk to you soon.